Hey traders, this is Christian from Traffic Trade Group, and this is your end of day market recap for Monday, April 25th. Risk disclaimer in front of you. Everything that we're going through is for information purposes only. You could read the full risk disclaimer right here. So nice turnaround in the markets today from where we started. We had a little bit of continuation to the downside from what we saw towards the end of the week, which was pretty nasty sell-off and a move basically coming down into support. That was the first part of the day, but we saw things rebound nicely. So where did we finish for the day? SPY finished up for the day, up about 60 basis points. The Qs led today. Nice outperformance there. They actually rallied 1.8% over the session, and they finished up 1.3%. We can put that in green here on my spreadsheet. 1.3%. The Dow was also up as well as IWM. Nice rebounds there as well. Nice move in bonds today. Sometimes I think that gets overshadowed. I think that we needed to see some stabilization in what was happening in yields over the last couple of weeks, right? So yields down, prices higher. We'll go through a couple of these charts. Gold sold off. Gold and silver both weak today. That just is what we saw for the last couple of days overall in commodities. Some of those commodities and commodity sensitive names and equities came back a little bit today. VIX ended up down for the day. So let's go over a couple of the macro charts, and then we'll talk about where support came into play, which I think was pretty interesting. But I want to talk about, I do want to mention where we are in terms of the bond chart as well as the VIX, because I think those are, another one of the factors that you have to kind of look at. And I think that bonds are stabilizing here. So this is not, a big move up. Clearly we saw something like this materialize a couple weeks ago, and then we saw a leg lower. So, I would love to see a further rally here in the bonds. I do like when you look at these red lines that are on my chart. A lot of these things have been taken out to the downside or realized, right? Those are virgin point of controls, right? So that's an area of high volume that has never been revisited before, right? So you could see, point of controls not being price not going through those, right? And if you look at even TLT, which is a different maturity, slightly different, but it is the long end of the curve. You'll see something similar, right? A VPOC was taken out there. Again, there's another one lower, but far away from it. So I don't think we have to worry about that right this second. Also, when we look at TLT on the weekly bar, what do you see there? You see a VPOC being taken out to the lower side. And so far we're bouncing. So again, just a little bit of a bounce. We're not really taking back too much technicals, but we do, so we'll have to pay attention to that. The other thing too in the VIX, this is something that we were looking at over the weekend. We did get back over 30 in the VIX today, but kind of got rejected, right? So another spike in volatility that didn't really go anywhere, right? So again, you're going to probably hear me say this a couple times in this video, but one day is not a trend. We'll see if this is another fizzle in volatility. Notice we did not get up into these 32, 33 range. All right, so let's go to the price action in the S&P. One thing to note here is we're way below the 200-day moving average. We did spill lower, and I think what will be interesting in the next day or two, and maybe this whole week, is whether or not we'll be putting in a little bit of a higher low from the lows that we saw back towards the end of February and the beginning of March. All right, so that's the main thing to see there. One other thing that I mentioned too, speaking of VPOCs being taken out, there was one to the downside, right? And this goes back to the week, right? From this volume profile right here, right? And this value area that price didn't even get through, didn't even touch, right? So a virgin point of control is created when price does not pass through this point of control. But I thought that this was even more notable because price didn't even get inside this whole value area, which is even more significant. So that has now been filled, right? Or realized. Right, so that's the low that I would basically watch right now is this version point of control 42.16, right? And that was something that I highlighted on Twitter as well as we talked about it in the training room this morning too, as a possible level that we could see a bounce from. Again, always possible, right? And then when we look at NASDAQ, this was something that we've been talking about now for, since we've fallen into the value area for the month, right? Is that the 80% rule was in effect. I get a lot of questions about that. What's the 80% rule? Right? The 80% rule, right, is using value areas, right? And of course, using volume at price, which I use heavily. It's when you start a period either above or below the value area, and you establish yourself during the period inside value. There's an 80% chance that you go all the way from one side to the other. Again, it's not a 100% chance, but it's an 80% chance, and it's known as the 80% rule. So you could see no longer that it's up in the upper left telling you that that rule is now complete. So a level of support is right here to trade from, and that's 13,203 in NASDAQ futures. Again, 13,203, that's the bottom of value. Now, do I love this setup in here? No, I don't. I mean, I like to see more confirmation that we're going to hold this level. I like to see us back above at least the 5-period moving average. So there's going to be some work to be done, right? And at the very least, this can kind of lead to some nice day trading opportunities, which is basically how I traded today. Right, was just looking, noting that we did hold support and we bounced from it, but we've got a lot of work to do considering, the sell-off that we saw towards the end of last week. If we hold this level, 13,203, or if you want a level in the Qs, that could also be known as a little bit of a higher low. Okay, so that's right around 321. Okay, and then IWM. Just to look at this briefly, IWM is still, I think, a mess. I've been calling IWM a mess for the last few months, but for now, we're holding this bottom of the range, but still, right, we're below value. I don't like this picture as much as, it's not that I like any of these pictures, but a little bit better than what we just looked at in S&P and the Qs, but still below the 5-period moving average. So again, I think this price action that we saw today could be a starting point of a rebound. We'll just kind of have to monitor that. And of course, we've got a ton of earnings this week that is really going to drive probably what we're going to see in a lot of the, in a lot of the price action in the indices. Now, again, being that we've got so many big companies reporting, it could be you get a couple names that miss and a couple names that beat, right? And then we're going to have to see if buyers come back in to this market once those earnings reports are over. I mentioned that because I think that that's the most probable thing that could happen, is that you see a couple names miss and a couple names beat. We kind of go from there. Cadence had good earnings after the close today. All right. So a couple other things that I just wanted that I from the weekend that we talked about was the equity put call ratio from Friday, by the way, not today, but this is notable because we really haven't seen fear kind of creep into this market too much. This is the highest reading in the equity put call ratio, 0.87, right? So that just indicates to me that something has, finally fear is in the market a little bit, right? When you look at this 5-year, this is more of a level that is actually more normal what we saw on Friday. But in the last couple of years, it's definitely a little bit of a change in tone. All right. I use this mostly for contrarian signals. Right. And then the other thing too, which I find interesting, is when we look at high yield credit spreads, we're still not seeing anything really damaging here, right? Which I think is good for overall market structure, right? So let's look at the 5-year chart, right? This doesn't look, from what we've seen so far in the market, this is a little bit more controlled, right? Another thing, look at what happened in 2008, right? It's not even a blip on the screen so far in terms of credit spreads. So it'll be interesting to see how this develops. I think for now, putting things in perspective, right? This is what is it, midterm election year. This is notoriously a weak time, a weak year in terms of, election cycles and that kind of thing and seasonality. So I think that, rolling with the punches here, in this market and not getting too bearish, of course, not be, I don't know how you could be too bullish here either, but I think just kind of staying within the lines right now, not getting yourself overexposed and basically, trying to make a little bit of money this year, as we're, almost through at this point, 4 months of the year, I think is the name of the game, and to see if that changes as we go along. Right. But I think right now, just not being, one of the messages I try to give in the weekend video was not being perma anything, not being perma bullish, not being perma bearish. Just, for me, and I'll kind of wrap this up here and then we'll go look at some of this. We'll look at a few single stocks, but, respecting that we're below the 200-day moving average and we got a pretty sideways price action going here. So until this really breaks the lows of what we experienced earlier in the year, right, then I think that, for me, it's going to be being defensively positioned right now until we get back above the 200-day moving average, and then watching and observing how these earnings reports come out this week, right? So that's it for the major market action. Let me just pause the video just for 1 second. All right, I just wanted to bring up my trade blotter. As always, I show you guys in this free video, I do give you a glimpse at what I traded for the day. I traded mainly TQQQ. Correlations really picked up last week, where a lot of things started to move together. So I thought a rebound might be coming, considering that we held support in the Qs, right? NASDAQ futures. So I just traded a little bit of TQQ. Didn't make a ton of money on it. It didn't move that much through the overall session, but that's okay. What else did I trade a little bit of? I took some profits. One of the few shorts I've got left on, which is IYT. I took some profits in that this morning. Twitter, I got out of my residual position in Twitter. Didn't have a big position in this either way. I didn't want the event risk of if a deal didn't fall through, but just wanted to kind of participate a little bit in it. So got out of that trade pre-market. CBX and some of these energy names did come back a little bit from the lows. They might have more work to do. I don't know if it's going to be a straight rebound. So for now, just took this trade off and we'll watch. Right. 158, 157. I'm out of that name. And again, I think right now, what we're experiencing is intraday volatility. So taking what the market is giving, which is some good trades in that aspect. INVH, which I liked what was going on today in some of the home builders as well as some of the REITs. I like this breakout that we saw out of range, and I like the little bit of a step back. And you saw bigger volume on this move up than you did on the downside. So I did stay long a little bit of that name. I just like how it reacted. And I kind of like being a little bit of a contrarian too in this space. Nobody likes the home builders or this space at all. So I don't mind being a little bit contrarian with it. Also, I thought it was interesting that ARC kind of led, right? ARC ended up about 3.6%. Again, this is not my favorite group of stocks, but I'm still going to pay attention. And for now, they did hold those lows from where we saw this here. So again, just something to kind of monitor. Again, I won't be going long here or anything, but I thought the outperformance was interesting. One name I'll be watching for tomorrow too. I'll be watching a couple of growth names for tomorrow. Preferably names that don't report this week either. I thought the Zscaler, let me get to the right. We get to the daily chart first. Right, and you could see a nice bullish engulfing for the day. Again, has a lot of work to do, this name, deep below the 200-day moving average. But for a trade tomorrow, I will be watching 217.50 Just two names that caught my eye in terms of option activity today. Alcoa, see if I can bring up this trade for you. Right, this was a name that got really hit hard last week. All right. So you should be able to see that. Well, maybe not. Where did that go? Oh, looks like the system didn't like me bringing that up. So might be a pause in this video here for a second while this gets adjusted. And